Hi there, welcome to kneppyinvests. Skyfii is a company I did a little bit of research on about 3 or 4 years ago. I haven't been really following them too closely since then. However, I've been tempted on a few occasions to do a little bit more research or even take a bit of a punt on this company. When I started my research, they were into providing marketing products or data-driven marketing products to shopping malls or shops within shopping malls, that sort of thing. So this is a software tech company that does provide analytics and data-driven marketing products. Over the past few years, I just have noticed that they have increased the shares on issue, even though they have been roughly about operational cash flow positive. So they have done a few acquisitions. In fact, one of the most recent acquisitions done a few months ago, the market didn't really like it. I'll show that in the chart. That was a catalyst for a re-rating to the downside of the share price. But before that, I just noticed the shares on issue have increased over the last few years, along with the market. However, the share price has remained around steady, or not steady, but is almost flat over the last 4 or 5 years. And that's what happens when a company continually raises capital, increases shares on issue. Even if the valuation of that company increases, the share price might just remain static, might not increase along with the valuation of the company. That's what happens when you continually, dilute current shareholders. That sort of thing can happen. It seems like Skyfii has done that in the last 4 years. I think they've tripled their shares on issue during that time period. Before we look at their Appendix 4C for the March quarter, just a few facts in regards to Skyfii. The ticker code for Skyfii is SKF. Could it be anything other? Maybe it could be. Maybe SKY. Market cap is 43 million. What I usually do here, when I see a market cap of a company, I want to compare that to the revenue, operating cash flow, any other sort of metrics, profit, and also if they do have annual recurring revenue, also like to compare it to that as well. When you look at the revenue and operating cash flow, this company is increasing their revenue, currently at 14.1 million, and they are operational cash flow positive, 2.4 million. Just looking at those two numbers would be suggesting to me there is potentially some value here. The market cap and the share price of Skyfii has dropped over the past 3 months, ever since they announced a capital raising and an acquisition towards the start of March. I'll show you the exact timing of that when we look at the chart. So I think the share price has almost halved, so the market cap has almost halved. The market did not like that announcement, and this could be this is starting to get a little bit more interesting for me right now as a potential buyer. But the real reason why I think this is potential attractive or good value right now is the annual recurring revenue, 13.3 million. What I typically do with these sort of companies with an annual recurring revenue, which is mostly SaaS companies are a little bit more sexy. You just times the annual recurring by revenue by 10. And that gives you a rough idea of how you can value those sort of companies. And if you do that with Skyfii, there could be some value here. Now, that's not taking into consideration the growth of annual recurring revenue. If a company is growing their annual recurring revenue quite quickly, you might have to give a bit of a higher multiple than 10, maybe 15 or 20. And if a company is not growing their annual recurring revenue hardly at all, you have to give that multiple a little bit less than 10, maybe 5. And even if you do that with Skyfii, just times that annual recurring revenue by 5, that gives you around about 65 to 70 million. So there is still some attractiveness here for Skyfii. That's the reason why I'm starting to follow this company's share price movement quite closely, just waiting for this downtrend to stop, waiting for this selling to dry up, because this selling has continued for about 2 months. Now let's have a look at their Appendix 4C that they released on the 28th of April for the March quarter. The first thing I always do when I open up an Appendix 4C is I go straight past all that, activities for the quarter and go straight to the statement of cash flows, straight to section 1, the cash flows from operating activities, straight to receipts from customers. I do have an idea of expectations of what I want to see, and for Skyfii that was around 4 million, and they hit that, just over $4 million. And then I go straight to the bottom, And the most important part here is whether the company is an operational cash flow positive or negative. Probably the best way to say with Skyfii is operational cash flow neutral, only positive by $30,000. So that's really not that much. Now, in saying that, over the past 9 months, receipts and customers 11.2 million, and Skyfii were operational cash flow positive in operations by 2.1 million, helped by government grants and tax incentives by 1.1 million. One of the main reasons why they weren't quite as operational cash flow positive this quarter was their staff costs. $2.7 million in staff costs. In the past 6 months, they only spent $3.2 million in staff costs. That could have been because of JobKeeper. I don't know. The main reason I'm really interested in whether a company is an operational cash flow positive or negative is all about the potential of capital raisings in the future. If a company is burning through a lot of cash, they have to keep doing capital raisings, and eventually everyone gets sick of that, and at one point in time they might fail to raise the necessary capital to keep the business going. If a company is operational cash flow positive, technically they don't have to do any capital raisings, particularly if they're not spending any money on investing activities, financing activities. Now, Skyfii did spend some money on investing activities. They spent $700,000 on acquisitions, and that raises another point. If a company is operational cash flow positive, they can fund acquisitions through their own business. How that businesses generates cash in their operations. And that's very important for me because that means a company can keep on growing through their own operations. They don't have to raise capital. Skyfii, for the quarter, they lost $600,000 in cash because of acquisitions and finished the quarter at $2.8 million. That should grow during the June quarter because they did do a capital raising. I'll talk about that when we look at the charts. Now let's have a look at the receipts history through time because that's very important as well. We need to know if receipts are growing over the past 4 or 5 years. This is exactly the sort of receipts history you want to see for any company on the ASX. A graph that goes from the top bottom left to the top right. Receipts are growing through time. You cannot argue with me that they're not growing. This is the very definition of growth. In fact, the first quarter they released, their Appendix 4C, was December quarter in 2014, $7,000 in that quarter. And they've grown that from $7,000 in a quarter to $4 million. That's the very definition of growth. I just calculated the compound quarterly growth rate over the past 3 years, sort of to see what's happening once they grew receipts to over, say, to 1.15 million. And they've been growing over the past 3 years, their receipts at 4.5% per quarter. Annualized, that's around 20% per year. That's good growth for any company. And the most recent quarter, the March quarter, receipts of $4 million is a record quarter for this company, and it was to my expectations. You can see a tiny bit of lumpiness there. You can see in the July quarter 2019 and 20, we did see a little bit of a dip, just like we saw in the December quarter for 2020. So don't be surprised if we see another dip the next quarter or another rise. Who knows? But that doesn't mean the business is not performing or is performing. It's just because it's a natural movement, sort of natural thing you see whenever you see an uptrend. There is or can be a bit of lumpiness there. The last thing I want to show you with Skyfii is just the 1 year daily chart here. I did look at the weekly chart over the last 5 years. Nothing really to see there. But when you look at the last year or so, there are a couple of interesting features here. Between about August and we'll say December of 2020, the share price was in a nice little uptrend. There was not a lot of volume, so I would actually classify that uptrend as fairly weak. You really want to see an increase in volume as the share price rises. That shows you the market is interested in the company. That sort of was complete opposite here with Skyfii. In fact, the volume started to go down as the share price rose. That means the market is becoming less and less interested, not a very powerful move. And that's one of the reasons why I decided not to take a position in Skyfii, was just the lack of conviction of the market in Skyfii. Then we saw the share price move sideways for about 3 or 4 months until the 6th of April, when Skyfii announced a capital raising and an acquisition. The market hated this announcement. Share price dropped 10% on that day. So the share price around that point in time was just above 20 cents. In fact, it was about 22 cents or so the previous day, and the share price has been dropping ever since then. In fact, the share price has halved in the last, we'll say 2 or 3 months. So what's April? Yeah, almost 3 months, not quite. We'll say 2.5 months. So when they released their Appendix 4C in April, the share price went down 3% on that day. But that's just another sign that the share price was in a well-defined downtrend. We have seen a little bit of more volume come in during this down period. So as the share price has fallen, the market is getting a little bit more interested. What I want to see is really high volume in numerous days to show me that the market is getting excited about where the share price has fallen to, that the market is now considering there is some good value with Skyfii. Not quite seeing that yet. Preferably, I'd like to see a bit of consolidation in the share price, and preferably when they release the next Appendix 4C towards the end of July, if the market loves that, that could be the breakout we're looking for. Before that, I'd like to see a bit of consolidation in the share price. If that is a potential breakout, it could fail simply because the share price is in a downtrend. You see that a lot. Potential breakouts fail simply because the share price has been in a downtrend a few months leading up to that potential breakout. That's all I have for this Appendix 4C March quarter video for Skyfii. If you have any questions about this company or any other company on the ASX or anything else, make sure you leave a comment or question in the comment section of this video, and I'll answer anything you have to say in due time. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's all for this video. Have a good day. Talk to you later. Bye.